I'm Daniel Lader, founder of Lader CPA. Pardon me. Hi there. I'm Daniel Lader, founder of Leader CPA and Associates, and welcome to my ongoing live series on building a successful private practice from beginning to infinity. Now, I always like to start off with a joke, so let's go ahead and start with our joke today. I meant to tec- I meant to text my therapist, "I'm feeling overwhelmed." I accidentally sent it to my accountant, and he replied, "Let's schedule a quarterly review." Close enough. All right, so today's topic is going to be on the tax implications of offering sliding scale fees to your clientele. Now, for you longtime listeners, this is going to sound a lot like our discussion on offering discounts. There's a lot of similarities, so you're going to notice some repetition here, but that's okay. Putting more good information into the universe never hurt the universe. So, first, why does this matter? A lot of therapists offer a sliding scale fees to increase their accessibility and better serve their communities. This is okay. This is ethical and helpful. So, don't worry if you're doing that. But it's important to understand how that's going to affect your taxes. So, let's break down how the IRS looks at those sliding scale fees. First off, the IRS only taxes your income that is actually received, not what you could have charged. Okay, that seems pretty straightforward right there. Now, if you are charging a client $60 instead of your usual $120, you're only reporting your $60 as income. There's no need to track that discount or foregone portion of your income for tax purposes. None, just what was actually received. Now, what do we do with the discounted portion or the portion that's not included? We don't do anything with that. We do not create tax deductible expenses or anything else with that discounted portion. Nothing. Don't do that. If There's sometimes a misconception that you can write off that difference, the amount you've forgone. That's not true. Don't do it. The IRS considers it to be unearned income, which is not taxed anyways, and it's not a charitable contribution. I've seen that mistake done a lot. Just because you're offering your time at a discounted rate does not create a charitable contribution. It also doesn't create a new business expense. We're just recording the revenue at a lower level. Now, what about your other business expenses, the regular ones? We can still deduct all those normally. Your income might be lower, but those expenses like your rent, your software and subscription costs, your marketing, they're still deductible just the same as before. Your use of a sliding scale does not affect the amount of those write-offs and deductions. So it only touches your income portion, as we said. Now, a key to doing this is to make sure you are being consistent in how you do your sliding scale. In case there possibly might be an audit, you want to have documentation and consistency to support yourself. Now, that's not too hard. First off, make sure you have some kind of written policy about what your sliding scale range is. None of you slide your scale all the way down to $5 or zero. You always stick it somewhere as your bottom level. So have that written down. Also have consistency in how you apply it. What characteristics in your clientele are you looking for that is going to trigger you using a sliding scale? Things like, are they on insurance or a cash pay? Are they having some kind of situation or financial difficulties that you can quantify? And here's the thing we always accountants as well fall in the trap of. If we offer a discount but don't clearly specify the requirements, everyone's going to ask for that discount because that's human nature. If we see something valuable and then see that it's possible to get that valuable thing at a lower price, we're going to ask for the lower price. Human nature. Nothing wrong with those humans doing that, but we need to have written policies and procedures so that we are not getting sucked down with that continual ask for discounts. So have a written policy, make sure it's agreed to, make sure your clients know about it as well. Now, one thing is consider the impact on your cash flow and your tax projections. Obviously, you're getting less money in. That's very clearly affecting what your cash flow is. You offer a discount to everyone, your cash flow goes way down. Offer no discounts to anyone, your cash flow goes way up. That's one thing you have to consider and balance in your equation of your business. Also, one thing we don't always think about is what other effects reducing your revenue through a sliding scale will have. This is going to impact your tax projection, which is going to change the amount of taxes you should pay either quarterly or annually, whatever your system is. So less taxes, of course, less income means less taxes. We all know that. But here's something we're not thinking about, at least not initially. Decreasing your revenue through sliding scale, that's also going to impact the amount that we can contribute to our retirement accounts, depending on depending on the type of plan we have set up. So keep that in mind. It always affects more than just your revenue. It affects everything that is tied into what your revenue number is. So it can decrease your the amount you can put into a retirement account. And if you have other financial goals that you're aiming for, it's going to affect that too. So keep that in mind. It would be nice if we could offer everyone who needed it our services at a discounted price. That would be nice. That's not practical, though. We all have to pay the bills. Okay. Now, um, here's some additional thoughts that might, or additional tips and thoughts that might help you out as you work with a sliding scale. Your EHR software may already have codes built in to handle a sliding scale. That's good. Familiarize yourself with them. If not, you can probably set up those codes yourself to work with the sliding scale. Now, this helps more with your internal reporting. You're going to want to know who is paying a discounted amount versus who is paying a full amount or through insurance. That helps with your internal budgeting, your internal planning as well. Remember, the IRS doesn't care. They only care about what amount was actually received. So, a sliding scale, that is a great way to help increase your outreach into the community. I know all therapists have a big heart filled with empathy that they want to kind of reach out and touch as most people as they can. That's fine. And doing using a sliding scale, a well managed sliding scale, is a great and ethical way to do that. But remember, there's always the financial side of that coin you have to consider too. So make sure when you're using your sliding scale that you're making intentional plans, not just willy-nilly. You're being intentional. You have a written policy you're sticking to. You have written requirements and criteria for who can use the sliding scale. That way, your revenue isn't just disappearing as you help people. We all have those bills to pay, like I said. So that wraps up our topic. If you have questions about anything, feel free to comment on this video, to DM me directly. I'm happy to answer any questions you might have. Now, also, if you would like to schedule a free 30-minute discovery call with me or someone at my firm, go ahead and DM me. We'll send you a calendar link. We'll get that set up and on the calendar. We will talk about your practice and your needs and see what we can do to help you with your tax strategies. Now, go ahead, follow, subscribe, whatever, so you're notified of future events and you receive tax tips from us. And visit our website, latercpa.com. I will see you all on the next video. So have a great weekend and keep helping others to help themselves. Bye-bye.